Sameer, let's get in your thoughts. We just asked Kunal about it. QIP has been successful, not much success with the stock though.
I think rather than look at the stock in the short term, one has to see the kind of capital that has now come and seen value at a price. So the kind of investors, that is important. The amount of money that is allocated for growth, that is important. And assuming that one thinks that most of the provisioning is behind us, so now can you try and get in and lock assets at a decent yield from here onwards? I think that is what will decide the growth trajectory and the U-turn. And once people get a sense that, okay, that is clearly happening, then maybe people will start showing confidence. Because I think earlier there were rumors that the QIP would be in the 95-100 rupees band, but I think the very fact that the investors have seen value emerging at 84, that clearly shows that there is still some doubts lingering. So unless and until that gets cleared, or at least you get incremental clarity in the positive direction, one would find it very difficult to assume that people will come out and bet strongly.
I don't know whether I'm right or wrong. I hope I'm right in my assessment. But historically, whenever I've seen risk capital coming back to the market, money coming back from HDFC mutual fund or other mutual funds at Yes Bank in the current environment is risk capital. When risk capital starts coming back into the market, into the economy, that's the time you genuinely see a bottom. Because you think that the margin of safety for an investor or margin of safety for an entrepreneur is on your side. Is Yes Bank a telltale sign that the Prashant Jains of the world are now buying? And they're buying Yes Bank, which they've never bought in the past. Because HDFC balance is managed by Prashant Jain.
Correct, Nikunj. So I think if you look at what happened in the 2009 cycle, we had a situation whereby at that point in time, real estate was a bad word. But then you had a DLF doing a QIP which went through successfully, which basically stresses the point that you're making, that at that point in time, equity investors, institutional investors went ahead and put money in. And that perhaps sort of gave a lot of sentimental boost and animal spirits got unleashed. But I think the financial sector or banks per se with asset quality history, people who would come and commit serious capital would wait for confirmation. Yes, you're right. From here, maybe you may not see in the short term too much of price damage incrementally. But from here, do you see the trend clearly getting established that now the stock is back on its growth path? Well, I think on that, the jury is still out. People would like to see at least a quarter or two more of this money in the system being utilized, whether it is for growth, whether it is for buffering or whatever. I think that is what is the point here.
Okay, I just want to talk a couple of stocks here. And, we're getting ready for the pre-open rates. Pre-open session does not matter. First, what matters is that, thank God we were off yesterday. Otherwise, given that what happened to Dow on Wednesday night, we would have had a gap down start of 200 points on the Nifty. But global storm for the moment looks like there is an uneasy calm in global markets. I want to first emphasize the word uneasiness before I say the word calm. Uneasy calm. Second, there's a huge divergence which I think clearly is now visible within the market. So divergence number one, Vodafone and Idea. Both have done right issue. Both these businesses have got hit and haunted because of Reliance Jio. But post the right issue, the stock of Bharti has gone one way. Vodafone Idea has collapsed completely. It's now coming in the penny stock category. I hate to say that word, but it's coming in that category. And the second divergence, I think, after number is ICICI Bank versus SBI. SBI and ICICI Bank, they both in a sense were running neck to neck because of the corporate bank because the belief in the market was that market will revisit corporate banks. But post numbers, SBI has collapsed because markets are still not convinced with whatever assurance they are giving on the NPA front. Now, the fact that, the chairman itself is saying that I'm looking up to the God and hoping for NPA resolution, that's not going to force market men to look up to the stock. In fact, they've started looking down at the stock after that comment. So that's SBI, and ICICI Bank is doing okay. Vodafone and Idea have already discussed the indicator. Let's look at these comparisons. SBI, I'm looking up to the God for NPA resolution. Investors are saying, I'm looking down at you. What are you doing? I'm hammering the stock down.
Well, because the fact that
you're such a classic white. I've never heard a banker say like this.
I think when you're talking about an institution that is 1/3 of the entire lending system in the country, I think there are a lot of compulsions that one cannot appreciate or appreciate less in the short term. Whereas for ICICI Bank, one has to see that the repair job has been on for the last pretty much 3 quarters. So therefore, the confidence level that today people find that what was committed 3 quarters back and it is getting established successfully every quarter on. Every consecutive quarter, people get more confidence that yes, the NPA cycle, the worst is behind. In case of SBI, I think, the March quarter numbers definitely gave the street a lot of hope that yes, we seem to have seen the worst, but there seems to be a blip on the June side. Now, that could also be on account of a lot of reasons. April, May, June was an election quarter, and in that you see government spending is under tremendous constraint. So therefore, the amount of money velocity that you see in the system, that goes down. Now that has partly been corrected by the fact that your RBI stance on liquidity has turned from deficit to surplus quite markedly. And once you put money back in the system, I think the wheels will start turning. So yes, you're right. SBI stock correction may actually be a good entry opportunity for people who are looking at, say, the next 2-3 years out. Because if credit has to grow, and as the chairman says that yes, we are looking at, your YOY growth is still 12.5%, which is not bad for a bank of SBI's size. And we are hoping that once the money comes back into the system, the festive season is ahead of us, credit growth picks up. So it may not be a bad situation which will remain like this for the next foreseeable quarters. So SBI's price correction may actually be a better opportunity.
On Wednesday night, Dow has registered its sharpest fall for 2019. Now that's a scary headline to work with, especially when you know that the local sentiment is very, very fragile. What is giving this booster to the market yet again is this hope and belief. Hope and belief. Actually, belief I think is a bigger word, because that the Prime Minister's office or the Finance Ministry will be coming out with something big, large, magnus opus to kickstart the economy, whether it's for capital markets, whether it's for job creation, whether it's for autos, whether it is on the investment commitment. Whether a lot of view what markets are, whether this view will get whether this will be substantiated or this is just one of those hope rallies, I don't know. But I can tell you for sure that the market positioning is such that if we don't hear something on the FPI front in next couple of days, or on something on LTCG front, or something on auto as a package in terms of government support, the market short-term momentum wherever we've got, I think that will get completely reversed. So the market level, Sameer, according to me, are now pricing in FPI reversal. They're already pricing in. If nothing happens on that front, then we could be staring at what, 2, 3, 4, 5% on the Nifty.
Nikunj, actually, let us look at now. Yes, there is a lot of gloom, but see what the Prime Minister said in his address yesterday. You will spend $50 billion on this entire, water and, getting drinking water to every home. Now, $50 billion is a lot of money. Now, I think once he says that, there will be a lot of industries, pipes, etc., where people will start looking at that when and how does that spending actually come about. Yes, there is a expectation built in on account of a reasonable view being given to the FPI demand on the taxation side. But I think, having said that, there is also something on the auto side, that the inventory in July has actually been pared down quite a bit on both the passenger cars as well as CVs. Now, that could also be a function of a large production cuts that the company has already enforced. And as the Bosch management commentary says that this seems to be more like a cyclical slowdown, a structural slowdown rather than a cyclical one. Now, they are already trying to take steps in terms of, reskilling people, redeploying them. So,
cyclical slowdown, and when sales are down 20% for 7-8 months in a row, I don't know what is structural then. I mean, 20% for 7 months if sales are down, and you may be in this denial mode that, okay, this is cyclical. But just imagine what's happened to your sales. I mean, if you were, let's say, a year ago, 100,000 vehicles, every month if you are losing 8%, 10%, on an average 15% for last 7 months, imagine what's happened to it. I've been told that auto ancillary companies...
And I wonder what if it were a structural slowdown, or which it actually is, but then how do you define a structural slowdown if
which is what
people are still terming it as cyclical?
No, auto ancillary companies are shutting down.
Yeah.
The plant capacities are just not getting utilized. I think there is a structural disruption and there is a cyclical slowdown. So it's a very difficult sector to gauge, and I frankly don't agree with even Mr. Agrawal here when he came on the show and said, I'm buying Maruti. And my question was that Maruti today also is available at a P of 25 or 20 times. At 20 times for a sector where there is a cyclical slowdown, okay, and a structural disruption because of EV, how will markets value it? I think 40p for Maruti will not come in a long, long time. That's my limited point.
I think you have to see that there is a BS6 transition that is currently underway. So that is also leading to a lot of the correction in the entire inventories as well as the buying patterns. So I think the right view will emerge once you see the entire inventory getting cleaned out, because post January 2020, everybody will have to be compliant to the BS6. Now that is a significant transition. So you're right that over the last 6 months there has been a continuous slowdown in terms of YOY sales growth numbers, but there is also in the backdrop of this transition that you have to view it in that context. So yes, a substantial part of it is behind us. Yes, it could get a bit worse before it gets better, but given the fact that rains have been better and monsoon is a big sentiment driver, hopefully the festive season should be better than expected. The government spending is back on track with the elections behind us. There is a lot of liquidity in the system. So you've got the right ingredients. Now, whether does it spice up a good sauce and hence the outcome is good, that one still needs to see. But yes, the valuations have corrected quite a bit. So that is a reality. The companies are today sensitive to the fact that yes, they cannot maintain the same growth rates, hence expectations of investors have got aligned, companies' production schedules are aligned. So a lot of the hard-hitting bullet decisions have already been taken. So I would say that the sector is not is not comatose. Yes, it is not in the best of health, but it is probably looking for something that can help it pick up and run the moment certain things in the environment change.